Profit margin. So gross profit, net profit, all these things. What does it mean? Why does it matter? Well, let's canter through this and I'll show you why it matters. And not just does it matter, but understanding this is absolutely key to understanding your business and whether or not it's going to be profitable, and more importantly, how you can leverage that to make a lot more money. So gross profit, very simply, to calculate this is your revenue minus the cost of goods sold. Cost of goods sold is basically labor and materials. It's those direct costs that you have, those direct costs for fulfilling your product or service, whatever that is. Net profit is revenue minus all of your costs. So that's things like your labor, cost of goods sold, it's your tax, it's your operational costs, interest, utilities, all that kind of stuff is included within net profit. So to calculate these is really simple. To calculate your gross profit, this is very simple. It's revenue minus cost of goods sold. So we've got some markers on here. So revenue is 1,000. So it'll be 1,000 minus 500, which equals, in this case, very simple maths, $500. If we go over to net profit, then it's revenue minus all of your costs. So that would be 1,000 minus 810. Oh, let's try and do the right numbers. So it was 810, not 108. 810, which equals 190. So that's net profit, and that's gross profit, which is awesome. But that doesn't really tell you anything. You could be selling a product that's $1, or you could be selling one that's $150,000. So this net profit doesn't really mean anything in and of itself. So to understand this further, what we do is we then look at profit margins. So your gross profit margin, net profit margin, these are not dollar figures, these are percentages. And this is how you understand the whole big picture now. So how do we calculate those? Well, gross profit margin is real simple. It's your gross profit divided by revenue. And to get the percentage, you times by 100. So if we use this example, it would be 500 divided by 1,000, which would be 0.5, and then multiply it by 100. That equals 50%. That is your gross profit margin. Now this you can work with when you're looking at your business now, because this makes a lot more sense. That says that every single item that you sell, 50% of that is gross profit. But again, that only tells you part of the equation, because your costs could be a lot higher, so you're going to make a net profit which is a lot less. So how do we calculate net profit? Well, it's pretty similar. It's basically net profit divided by revenue multiplied by 100 again. So in this example, what do we have a net profit? It was 190 divided by 1,000, which would be 0.19 times 100, and that equals 19%, which is your net profit margin. Now this is an interesting figure, because this tells you how profitable your business is in totality once you take into account all your costs, so like the rent of your office, the cost of goods sold, tax, wages, all these things. That is the real important one, because that's the one that tells you ultimately whether or not you're actually profitable. This one could be 102%, but if it's all getting eaten up in costs, then you've not made anything. So that's really important that we've got that. So that's net profit margin, gross profit margin. If you can get your head around those, this will make things really interesting for you. Now, here's where things get not just interesting, but this blows my mind every time I see this. So if you understand your gross profit margin and your net profit margin, there's a relationship between the two. And when you understand this relationship and you can leverage it, then magic happens. And I'm going to show you why. So the only way that you can increase your gross profit is you either increase the price of your product or you reduce costs. So in this example, let's say that we do both. And what we do is we get your cost of goods, your COGS down to 400. So let's just put this up here. So that equals $400. And your revenue per sale, we managed to get that up to $12.50. So you've increased prices and you've reduced costs quite significantly. What that does, and I won't go through it, I'll just give you the answer, it's 60% profit margin. Now, remember, that's gross profit. But what does that mean for your net profit margin? Well, you made 10% of a difference in your gross profit, so we just add that on to your net profit. So your net profit now will be 29% because you're adding plus 10 on there, which equals 29%. And that's what it does for your net profit margin. So what does that mean in real terms? So that means 29%. So what you've done is you've increased this by 10%. It increases this side 10%. But what it does to your bottom line profit, because of the way this works out, and again, I'll do the math for you here, that equals an increase of 52% profit in your pocket, because 10% is added. So let's say this was 20%. You add in 10% on, it's 50% again of 20. So that's what you've added on, 52% profit on your bottom line take home profit, which blows my mind every time. So if you can increase your gross profit, it will increase your net profit, but it does it in a very different way. So I'm going to show you some other parts to this. And we'll just take this to the next few stages just to show you how powerful this can be. If we can get this side to 70%, then what this does is it puts your net profit margin, that would be 39%. And that's an increase. Hold on, so that's an increase in your profit. You've doubled it because you've added 20% on, but your net profit was 19 to begin with. If this is 80% here, and this is where things got crazy when you start doing it this way, that would be up to, that'd be 49%. So you increase it by 100, your take home profit by 158%. Are you getting this? Is this resonating? If you can understand the ratio between these two, this side of the equation, your take home profit can increase massively. And obviously the lower your net profit margin is, the more you're increasing that. Because if it's only at 1% and you increase it by 1% on this side, then you've doubled it. Obviously, if you're at 50% here and 45% here, then 10% is not quite as much, but that's still a 25% increase in profits. Does that all make sense to you? Hopefully it does. This is why understanding gross profit, net profit, gross profit margin, and net profit margin is super powerful for your business, because you can leverage this side of the equation to disproportionately affect this side and increase your profits massively.